When you think about retirement, you probably picture enjoying it, right? Traveling, spending time with family, maybe even picking up a new hobby. But for many retirees, taxes can drain their savings faster than expected, leaving them with far less to enjoy the retirement they worked so hard for. So joining us to discuss advanced retirement tax strategies are Laurel and Taylor Stewart, part of the team at Mattson Financial Services, our expert and sponsor, and a firm that's been helping West Michigan residents navigate retirement more successfully for decades. And so, how big of an issue are taxes for retirees, and why?
Yeah, I would say they're huge, right? Because the why behind that is you're saving money for future now because that burden's on us to do that for our own retirement. And we aren't thinking about what's down the road and that impact then. We're thinking about now and that impact right now. And so we really need to change that viewpoint and think retirement means income, which means distributions, right? Or taking withdrawals, which equals taxes. So like it should be every part of that conversation.
And to piggyback off that, it really is the savings piece, right? We're taught to save, we're taught to put away into the 401k, but we're not taught the difference between pre-tax and Roth as much. It's just, here's your new hire packet, you fill it out, you get your match, and you're fine. Well then, you know, fast forward 25 years and you're planning for retirement, thinking that everything's gonna be fine, and then all of a sudden you realize that, man, 20, 30+% of my savings, when I pull it out, is going away in taxes, and that's not a good feeling.
No, it's not. So what steps can retirees take to help manage their tax burden?
I think working with a fiduciary advisor and also working with your CPA. When you go to file your taxes, they're focused on that year, that particular year, right? You know, you owe a couple thousand in taxes. Well, if you make an IRA contribution, we can lower that. But we're just kicking that can down the road. You know, are we in a lower tax bracket now where it makes sense to just pay that and maybe make contributions to our Roth, maybe pull money out of our 401ks or IRAs and do what's called a conversion to fill up your income bracket, not bump you up to the next one, but fill up where you're at. So you've got that future compound growth that is all tax-free, giving you more control of that money and also helping reduce the taxes on other sources of income.
Yeah. Is it possible to actually lower your taxes while maintaining your retirement income?
It is, yes. And the key to that is the plan behind it all and making sure you have different types of assets behind there, not just diversification by your portfolio, right? Coca-Cola, etc. We're talking, you know, you've got tax-free dollars, which is the Roth, tax-deferred, which everybody's really familiar with, is the 401ks, the IRAs. I'm deferring this tax to later down in the road, or taxable, right? Thinking about your bank savings and things like that. So you want to have these various buckets set up so you can control, like Taylor was talking a little bit about the levels of income and what you have coming in, which affects your tax bracket coming to prepare you for tax time.
Well, and also within the investments inside of each one of those buckets, some are more tax-friendly in a certain bucket versus others, right? Like, let's use municipal bonds, for example. They're tax-free interest, right? Well, if we put that in our IRA, it's all taxable anyways. But if it's in your after-tax or your non-qualified account, that taxable bucket, you're getting that cash flow that is tax-free. So it's also, you know, having those buckets set up, but then also investing in the correct strategies within that bucket to maximize that tax efficiency.
Yeah, okay, so with it being filing season, a lot of people are working with a CPA or a tax preparer. And so how does that differ from retirement tax planning?
Yeah, really, you know, your preparer right now, when you give them everything, and saying, okay, I'm going to take it all, I'm going to put it in the system, and I'm going to do that for the past year, right? We're already taking care of what's already been done. Exactly. But they're not saying, well, what does next year, 5 years, 10 years, 20 years, 30 years look like, right? It's just a one and done, more of a transaction. So we try to change, you know, that perspective with our clients, working with their CPAs. You know, we help plug in with that communication too, to make sure we are looking ahead, not only for your benefit as the client, but also when you're done with these dollars or you leave this earth, what does that burden or that tax impact look like for the generations?
Yeah, and I bet you have a lot of stories of people that you have worked with, that you've helped them successfully navigate retirement tax planning.
Sure, yeah.
Yeah, loads of them. And one I can think of, we do this all the time, but let's say we met with this client. They had about $1 million saved in their 401ks. They had good income sources, so they didn't really need to take a whole lot worth of income off of their portfolio, which allowed it to grow. And they wanted to leave a legacy, which is what you want at that point, right? Your portfolio continues to grow. Well, projecting out at RMD age, let's say that money doubles. So now instead of $1 million, it's $2 million. And when you have to start taking those required minimum distributions, they were looking at somewhere between $70,000 and $80,000 a year that they don't need. So by looking at their tax bracket today, pulling 50,000 here, 75,000 there, filling up their income tax bracket, drastically reduced that overall RMD burden down the road, gave them more of that tax-free money that's then going to get passed on to their kids tax-free. Meanwhile, saving, depending on what tax rates change to, it could be, tens, if not hundreds of thousands of dollars in tax savings. Plus, they just have more control, and it's our money. We want to have the control over it.
Yeah, we've earned it. So if people want to get started, if they're at home watching, what do they need to do?
Yes, it starts with a simple conversation, so you can give us a call. If you're getting ready to retire or already retired, looking for that conversation, not just retirement planning, but really the holistic picture, especially with taxes, now's the time to give us a call. It's completely complimentary.
All right, so for you at home, take advantage of this special offer from Mattson Financial. Taylor, Laurel, and the rest of the team will sit down with you personally to customize an enhanced retirement plan just for you. This is a comprehensive plan that includes a look at your investments, your income sources, taxes, and so much more to help you get to and through the retirement you deserve. So reserve one of those spots now. Call 800-536-8907, and don't wait because the spots fill up quickly, especially now that it's top of mind.
Exactly. It's go time for everybody.
Yes, thanks for joining us.
Yeah,
Thank you.
This segment is sponsored by Mattson Financial Services. We'll be right back.